Hey guys, this is Colin from Blackjack Apprenticeship, and I'm joined with Joe748, SD1, and a special guest, Gary Kondler from Kondler and Associates. Gary, you're a CPA?
I'm just currently an EA for right now, but we have kind of like other CPAs, in the firm. It's always an interesting discussion, CPA versus EA. So kind of went more down the tax route here and didn't really need to touch audit. So just kind of focused down that direction for right now.
Awesome. And do you focus on gambling law?
Yeah, so the law side of things is, definitely interesting. So like kind of in our firm, we have a lot of different options of, legal counsel. I have an in-house director of tax compliance, and then we utilize some lawyers kind of all over the country when we need to source some information out, whether it's in regards to, clients needing tax court or dealing especially with a state legislation. We'll then bring in some state lawyers and see what their opinions are on new regulations, kind of touch on one that just came about, a brand new one popping up in New Jersey. So yeah, so we have a kind of a lot of different options when it comes to law, because you're just going to see there's a lot of different lawyers out there. Even the great thing last year at Bet Bash here in Vegas, we ended up meeting some great lawyers too. So just try to keep adding to the arsenal for when all of these issues pop up. And now all of these lawyers are starting to get utilized, which is great here.
It's cool you're going to Bet Bash too. They do a great job at that event. So it's cool that you're involved in that.
Yeah, it's incredible. Spanky invited us last year, and he wanted us to come and do a seminar for tax. I thought it was a great opportunity, but the whole time I'm thinking, hey, who wants to come to Bet Bash and talk tax? We're here to learn how to make money. We'll figure out the taxes later on. And I got a text from Spanky a couple days before, and he's like, hey, I actually had to move your time and your room because your seminar booked up pretty quickly here. So it was kind of great just to see people come together, especially when we're in a smaller space. I get to see it a little bit more than you guys do, but I could sit here and say, hey, I do tax returns for thousands of gamblers, but really not a lot of my clients really fall and operate under the same business model or the way that they make money, which is cool to see. And one of my things that I always say is like, just because everyone's so different, take into account their tax situation, where do they live? Everyone needs to be treated differently here. Every case is just not a black and white, cut and dry answer. So kind of going to Bet Bash was a cool experience. I thought people would be a little bit close to their ideas, not sharing their information, but it was really just people helping other people. So highly recommend Bet Bash for anyone that's interested, and we'll be back there again this year, about a month or so. And I'm sure we, as you can see, have a lot of things to discuss here.
Yeah, let's get into it, because I think everyone listening is probably on the edge of their seat wondering, are we screwed, basically? So what is the biggest change, or can you give an overview of what's happening right now with the big, beautiful bill and gambling?
Yeah, absolutely. So I think what we really want to pay attention to first here is, what information is hitting the internet right now? Where are people getting their sources from? Because I know some people, some sources out there that when they got involved and we started seeing this hit the internet, a lot of people were initially insinuating that you can only deduct up to 90% of your winnings. That's not true. It's up to 90% of your losses, which is going to have a big difference here. So, now what we kind of really want to, discuss here is, well, who is this going to affect more? What do we need to be looking at, and how are we really going to proceed accordingly? So, I think in an overview, I'm still just kind of telling my clients to just pump the brakes a little bit. Let's not freak out. There's a lot of states kind of getting involved here with trying to pass, I think you'll see the Fair Play Act is trying to get signed in by a bunch of different states right now. I know that there was some legislation last week. I think it was called the Full House Act. I think Ted Cruz and a few other people tried to push that through. But I still think, we're going to come in here with new legislation, trying to push back on it. And, I'm hopeful that the 90%, reduction or the 10% reduction doesn't really, get passed through here. But, definitely some things that we need to discuss here, because if you kind of pull up the bill, you're really not going to find a lot in that bill. First thing I did, bill comes through my desk. I do a Control F, type the word gambling, doesn't pop up anywhere. They're using the word wagering. It's 2 or 3 sentences. It is going to have some vagueness to it. Now, I think like when we kind of want to take a look at things, I think one of the perfect example is kind of looking at break-even players here. Now, in my opinion, I think that the bill is going to affect the most people with a high W-2G total or a high tax form total with a very low ROI. So, I think the perfect example to start here is, let's just first talk of like high roller poker player. Now, let's just say a high roller poker player comes to me. This person may only really be playing in 25K, 50K, 100K events. Doesn't really touch lower stakes, but obviously it's not uncommon for this players to bring me, let's say, $5.5 million a year of income. So cashes from poker tournaments, $5.5 million. But it's also not crazy for this person to come in and say, hey, Gary, I also had $5 million of buy-ins. So me and you both know that that would roughly equivalent to about a $500,000 profit for the client, where he would then go and pay tax. Well, in this situation, so let's say in 2025, this client will pay tax on a $500,000. If this rule goes through to 2026, this individual will now pay tax on $1 million, which is obviously a big difference here.
It is. Do you know, have you run the numbers on what it would mean for their post-tax profit?
Where I'll leave that answer a little bit ambiguous right now is it's going to have everything to do with what kind of option that player files under. Did he file as an amateur gambler? Because if he filed as an amateur gambler, okay, he's probably going to pay, let's just say 35% on that extra $500,000. Why I'm bringing that up is because if this client instead didn't file as an amateur gambler and instead filed as a professional gambler, not only is he picking up Fed tax and state tax, they're also picking up Social Security tax as well. So where that answer is ambiguous is that the Social Security coming from Schedule C is going to cap out around $165,000. So he won't pay any more in Social Security tax, but he will continue to pick up a 2.5% tax on an extra $500,000. So all of these things are going to start to add up, but it will have a big, distinction. And if we really want to sit here and just kind of give everyone and your listeners an overview, when we have the amateur gambler, just think that we're just kind of tying to our wins, backing our losses out, and then we're going to sit there and go pay tax at our tax bracket to federal and state if state tax applies. If we just quickly compare that to the professional gambler, you have two different changes here. One, you can come in with expenses now to lower your taxable income, but whatever is left over not only is going to be taxed by federal and state tax, you're now going to kick in a 15.3% self-employment tax. Mm-hmm. So those are the two distinctions. And the way the IRS makes that distinction is they really just say a taxpayer can file to be a professional gambler if they spend a substantial amount of time in the hobby for profit for livelihood. And you can start to see the vagueness already in a sentence like that.
In terms of the deductibility of expenses, if you're filing as a pro, like we do, the bill also says that we can, correct me if I'm wrong, only deduct 90% of our deductions too. So talk about that a little bit, because that kind of has a huge impact also.
What my team is trying to do right now is starting to get a very good understanding of how this 90% is going to be applied, because you'll see two different sections of the IRS guidelines being referenced here. So my current opinion today, here on July 16th is that there will still be a 90% cap on realistically what these players, such as yourself, are going to be able to take through Schedule C. So where that starts to get confusing for me is when you go through like a tax return software, I'm just assuming that the boxes are going to know to limit it. But when you set up a Schedule C, that can have thousands of different job titles. Am I just going to have to start getting in there and know to put in a 90% cap, or sorry, a 10% cap? It's going to be a little confusing, for some tax preparers to start to figure out how we're going to switch these tax returns, because the software is just really not going to know, because the IRS really likes to see the income sitting as amateur gamblers. Sometimes they miss the income sitting where the professional files. So I can see some confusion coming here if more law doesn't come out to kind of assist us in how we're going to do this. But as my current opinion is, yeah, all expenses will be limited to the 10% reduction, but you're going to see some things in people's tax returns that are going to throw these numbers off. I'll give you an example. What if I have a big gambling team out there? They spend a lot of money on data servers, things like that. We are now depreciating those assets and taking in a depreciation expense. You're telling me I now have to get into the software and limit these expenses up to 90%. It's going to be confusing here. So I think we're all going to have to sit and wait a little bit longer on what we're going to be doing with expenses here. So I'm assuming we're going to be hearing some more information on this, but as of right now, yeah, we're going to have to cap that at, the 90% right now.
So just for clarity, really quick, the Full House Act that came out of the Senate side, it's not dead.
Okay,
it
good.
just did not get through the
UC or CU.
Yeah, like rapid. So it was up to get pushed through faster is essentially what it is. And I can't remember the terminology they used for it. That's what got killed. And it didn't get killed because everybody seemed to support it. It's just our government, people trying to tack on stuff to it. And then somebody said, okay, well, I don't want it if you're going to tack that on it. And they just couldn't make it standalone. So it's not dead in the Senate. And then the fair bet is in the House right now. And it also, I think, addresses the 90% deductions.
Yeah. And so that's like, something that we're just going to have to kind of stay up on here.
So I think one of the misnomers out there that I've seen kind of in the Twitter sphere is that this doesn't really affect that many people. It only really affects pro gamblers, which is a whole another issue because no other business is treated this way. And that's kind of crap. But wow, what you just said, like, kind of leads me into a big question. Like, what is this going to do to the gambling industry as a whole? Because this is really going to impact your recreational gambler in a big way, especially somebody that does slots.
Absolutely. Because my slot players, for the most part, I'll say 80% of my slot players are really just going to be doing it as a leisure activity, as a hobby, but they could still be printing a couple $1 million worth of W2Gs. Now, it's not crazy for me to see big W2G amounts. I've seen up to about $30 million of W2Gs in a year playing slot machines. And in that situation, when I asked the client what his profit was, he was down about $600,000 on the year playing slot machines, but had $33 million of tax forms. So that client is now in a lot of trouble because if we're now talking about a 10% reduction, that's $3 million. Yeah, I know he lost $600K on the year, but now his losses would need to cover into the $3 million range for this client to not pay any tax. Yeah, he's in trouble. And to kind of answer your question, I think the high roller poker scene is going to be one of the biggest affected areas in this standpoint because they're going to come in with large W2Gs and a smaller-ish ROI because all of the players are very, very good at the high limit. So those two examples right there are the clients I see the most impacted by this. And yeah, I think it is going to dry up. I've obviously spoken to a lot of my high roller tournament players over the past couple of weeks, and they're just kind of shaking their heads right now, wondering what are they going to do? How is it fair? Like to pick up tax on an extra $500,000 at 35% could be $175,000 in tax. So now the client's going to sit there with a $500,000 profit. First off, pay tax, then pay tax again. What really was his profit on the year? Probably not much now after tax. We saw the talk last year about taxing unrealized gains. Yeah, that got shot down real quickly because that's never going to happen. It almost seems like this is an example of taxing an unrealized gain to me.
It's worse, in my opinion. Yeah.
Because at least if I had an unrealized gain, me and you both know, hey, I got a gain out there. I'm going to pay the tax someday on it. Maybe we'll just start paying in right now. But you're correct. Now I don't have the money out there. So what is there to pay tax on? So it's going to just be, a little bit of a headache kind of as this, gets progressed. And I know we're probably going to speak about it, so might as well just kind of get into it, is that, yeah, you're going to see a lot of discussion now surrounding this thing called the session method. I think, if we take a look at the session method, it's going to have to start to be utilized a little bit more. Session method of accounting is something I like to utilize a lot. But what I want, kind of all the listeners to have an understanding of is that if you want to track your session method, well, great. But what you also have to be very, very cognizant of is what was your W-2G or your 1099 total for the year. So if we play an example out where a client comes to me, he did it, let's say he's a sports bettor, he did his session method log, let's say on a 1-day time period, he may come to me and say, Gary, I got $150,000 of wins, 50,000 of losses for 100K profit. But what if that client hit a big parlay during the year, triggered a W-2G for $500,000 or some big, let's just say an amount larger than $150,000. If he doesn't put $150,000 on his tax return, he's going to get a letter in the mail saying that he didn't tie to his tax forms, because the IRS is always going to know your W-2G total. If you don't get that number on the tax return, you're getting a CP 2000 letter in the mail saying, hey, you missed this income, pay the tax or go amend your tax return. So while I do like using sessions method, if I have a client that their tax forms are larger, we either have to put disclosure statements on the tax return tying to the court case, but I see the IRS miss those disclosure statements all the time. And then a year later, I'll get letters in the mail saying, hey, the client didn't tie to it. And then we have to go back and argue the sessions method. Again, we get it through, it gets passed, no problems, but it's also not a great service to give clients and saying, hey, I need 3-4 months to fix this problem for you, because once I send a response to the IRS, I'm not hearing back for maybe 6 months. And they're sometimes not even going to send you a letter that everything is corrected. So as you can see, the session method is great. It still just can cause confusion here and there.
Can you actually explain the session methods? So with Blackjack Apprenticeship specifically, our specialty and what we teach is card counting. It's a low edge game that you can make a lot of money on.
But no W-2Gs.
No W-2Gs ever.
However, the sessions and how you define that, and my wife, who's a CPA, brought the session method up to me and defined it. She said, you're going to have a hard time, though, counting cards and saying that this is all one session when you were at a table for a day and left a table.
She's 100% correct. She's 100% correct. As you can see, it's going to be a nightmare. And the funny thing is that the court case is called Schallenberger versus Commissioner, and it actually is about a blackjack case. A couple goes into the casino. Let's just say they're playing $100 hands. They play 20 $100 hands. Let's just say they walked out with a $300 profit. They go to the tax court and say, hey, can we just put that we won $300, or do we have to put that we won 2,300, lost 2K? The court case said, hey, you just have to put 300. But my problem with that, and I know it's not a perfect example here, what if one of their blackjack hands triggered a tax form for $2,500? I know it's not, but now we have a $2,500 tax form to put on our tax return, but I only had a $300 win from that session. So that's where the session method gets a little confusing. But I do agree with your wife on this, is that sports betting is a little bit easier. We can sit here and kind of use a 24-hour period. Okay, hey, on July 16th, tell me all the baseball games you bet or whatever, all-star game going on. What'd you bet today? What's the profit today? Okay, tomorrow you had a loss. Maybe put that in the next column. That's roughly how I would like to see kind of sessions method, utilized for sports bettors. But, what we really have to do is kind of put our best foot forward in interpreting these court cases, because things are changing and, money changes, immateriality changes. And so, yeah, I mean, if you kind of look at it case by case, they'll say like, all right, well, if you were sitting here playing blackjack at Bellagio, you get up from the table, you go, it's not going well, you go over to Aria, they could essentially call that 2 sessions. I still agree more along the lines of, hey, if you're playing a game and we just move, but you're still playing blackjack at the same roughly limits, I more or less like counting that as 1 session. Now, if they're going to go play a bunch of other games, hey, may need to count that as a different session. But what I think blackjack is a perfect example here. And this really just kind of comes from like experience of being in the tax world, because blackjack players with a very small ROI here and a lot of bets, if you just coded every bet in and every bet lost, your numbers on a tax return could be hitting into the deep into the seven figures. I've seen this well too often. And now all of a sudden, just so you're aware, when we start to approach like $1 million of adjusted gross income on our return, we took our audit percentage, maybe sitting here at 0.1%, and we now could be at a 7.5% audit chance, all because our adjusted gross income went up because how we were told to put these numbers into our tax return, which I have a big problem with.
I wanted to chime in here. This brings up a really good point to me, which is that different forms of advantage play or professional gambling are going to be affected really differently. Of course, the most extreme example is someone that breaks even and now owes money. Like that's like the worst. But we've been modeling it out. Like we've been taking real card counters results, basically church team members, people that played on the blackjack team that I ran, and inputting it to see what does this actually mean. Here's the good news for people listening. It actually isn't as doom and gloom as it could sound for blackjack players. A big part of that is because we don't have W2Gs, and it would be insane to tell people to keep track of winning bets and losing bets. It would just, it's not feasible. So let me give a few numbers for people that are listening, and this might be interesting to you too, Gary, but we had a guy that he won over the course of a 544-hour year. He won $231,000. In 2025, he'd be at a 28% tax rate on profit. This is as a professional gambler. This is self-employment tax, 20% QBI deduction, blah, 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 blah. Okay. And let me just say, I'm not a tax professional. So these are the numbers that we ran. With this 90% cap, he would go from a 28% to 36% effective tax rate. Like that sucks. But it's not doom and gloom. However, when we changed it, and this is a high stakes player where his average session was 90 minutes. We were playing about as high of stakes as I know anyone that's a professional would play. And so these are going to be shorter sessions because of those high stakes. When we changed it to per day, it dropped it to 33%. And so 28 to 33, that sucks. But you know what? If the big, beautiful bill hadn't passed at all, they'd be at a 32% tax rate. Like, of course, all of us are hoping, praying, and like telling our Congress people to overturn this ridiculous law. But I do want to put a little bit of context that if there would have been no BBB, would be at 32%. If this thing doesn't get overturned, a high stakes pro would be at 33% for daily sessions. It's way worse if it's not daily sessions. I can give one other, we did another player. This is Loudon Often for people that know who he is. He, with $841,000 of profit, he would in 2025 be at a 30% effective tax rate, and he'd be at 37% if it's by session. And these are about 2-hour sessions on average. If it's by day, he goes from 30% to 34%. And if no BBB would have passed, it'd be at 32%. So, he's at 841,000 of profit, and he's getting an extra 2% compared to no BBB. Of course, we hope it's overturned and he's down at 30%. But I'm afraid for sports bettors, and I hadn't really heard, we were actually before this call talking about how does this affect poker pros, because I know Phil Galfond, like we did an interview with him about a year ago, and he's been very active on Twitter talking about it. I was wondering if he'd modeled it or if anyone had modeled it, but can you speak to that at all, how it's going to impact sports bettors versus poker? Like, is it sound about that same 30 to 35%, like going from 30% to 35% roughly?
Yeah, your numbers are pretty much spot on here. I think you even nailed it by even talking about the QBI deduction as well. I think that's obviously very important for poker pros to know. But yeah, I've been, following through Phil Galfond's stuff as well. He's been, absolutely phenomenal for the poker community over all of these years. But, someone asked me an interesting question the other day, and they asked me, and they said, hey, does this really affect a sports bettor who just arbitrages? And I kind of sat there for a while and thought about it. And I said, no, not really. Because if you think about a person who is just going to have a small profit every day, they go under the sessions method. We know they're probably maybe getting, let's say, zero point 0.1 of a bet sizing unit as a profit a day, maybe through arbing. I don't know, exactly all the numbers there. But if you go and look at a sessions method for an arbitrage sports bettor, he's just going to have, column A of profits that come in. He never had any losses during the year because his daily session, he always arbitraged, always showed a small profit every day. So I have a kind of a problem that there can be different caveats to gambling and what industry you're kind of gambling through that have effect on one player and don't have an effect on another player. Because if we then compare that to the poker player, well, the poker player is going to come with big W-2Gs. And again, if you don't tie them into your tax return, you're getting letters. And now all of a sudden you're trying to argue your sessions method. Because when you are responding back to the IRS, I think just for everyone to kind of know here, is that in my opinion, the way that everything works is that when your tax return gets sent through, there's pretty much going to be an algorithm that's going to be ran of what's on your 1040 versus what is in your wage and income transcript. So for instance, I always urge all of my clients that to every year after we do their tax return in June of every year, go and download me your 2024 wage and income transcript so I can tie it back to your tax return and see if we missed any income or not. It's not going to change your tax bill because we showed the proper profit. But if we miss W-2Gs, we want to amend those. We want to amend the tax return to tie to the W-2G amount so that we don't get a letter in the mail a year from now. Now, if we respond to an IRS letter, it is now not going through an algorithm. It is now going to sit in someone's hands where they are then going to make the determination if they think that you can either write all of this off or not write all of this off. It's now going to be a human being's decision. So that's why I kind of always say to people, well, make sure we get the tax returns in correct and we won't have issues going down the road. But we also have to be careful for it because if I try to do a poker player session method now, of course, my W-2G amount is going to be incorrect. It's going to trigger a CP 2000. And now I'm on a case-by-case basis arguing that with the IRS. And again, we don't have any information yet on how these audits or how the examination is going to be working. And you're not going to see an example like this coming until deep into 2027 because it almost takes the IRS 12 to 18 months to do a full review of your tax return anyway, from the day of submission.
Well, and just to put this out there, just getting audited is expensive. The blackjack team that I ran got audited one year, and this was, 15 years ago or something. It was like over $20,000 just in paying our accountant to handle. We passed the audit with flying colors and still lost 20 grand in a sense.
Oh yeah, and tax court will be even more expensive. I just had a client go through tax court a couple years ago. We set them up with our lawyers. That is not cheap, but we had to get the client into the right type of lawyer so that we can get the proper result. The difference was, hey, you either come out of pocket 20, 30, 40K, or you're sitting here looking at a $854,000 tax bill right now. What do you want? Yeah, it's not a great situation to be in. But guess what? These issues mostly arise from the clients missing W-2Gs. The only clients that really come to me with audits are not people that I did their tax return for because I make sure to check the transcript. But each audit that I see come in here, the clients missed about $500,000 of W-2Gs on their tax return to trigger that audit.
Well, that brings up the point that you said earlier, too. And I want to make sure people don't miss that. Because of this bill, if it stands, your audit percentage goes up because your income, and I should remember this because my wife has tried to drill it in my head. What is it, 10 or 15% variance plus or minus from your previous year or something like that? Typically gets looked. Okay.
It could trigger something like that. I do happen to see, I see a lot of messed up tax returns, unfortunately. People come to me, I see that they have income sitting as an amateur gambler. I see them have income sitting as a professional gambler. I've seen them take it below zero to trigger the audits. They come into Colin and Associates. It's not crazy for them to pick up an audit the following year. You are correct. But, in my opinion, we just want to be sure that we tied to all of our tax forms, because tax season is very, very hectic. Because a lot of these forms, let's just say clients gambling on some of these sweepstakes social casinos out there, we see them all popping up right now. My clients aren't going to be sent these 1099s till deep into March. And of course, they will sometimes be a little impatient, want to go get their tax return done in February. And I almost got to say, hey, let's just wait a little bit. I need to see all the tax forms I come in, because the determination I'm making off of your tax returns has everything to do with what type of forms you are bringing me. So, just for like all the listeners to know, you'll mostly see, these sweepstakes social casinos pay out on Form 1099 miscellaneous. Okay, it's not going to be on a W-2G. DFS will normally pay out on 1099 as well. But for the most part, everything else will be paid out on a W-2G. Unless you're really kind of betting offshore, you're not going to really see any types of tax forms come from offshore accounts. So question number one that always goes out to every one of my clients, and even when I get off this podcast today, I'm sure the first email that I'll write to someone will be, number one, what are your W-2Gs and 1099s total? That's the first question everyone needs to be concerned about during the year. Doesn't mean you're paying tax on that. I don't care if that number comes in at $50 million, but I have to know if it's $50 million. And then question number two that I'm always going to ask then is, what is your profit? That question sounds very silly, but you'd be shocked to know I have clients every year that have absolutely no clue what their profit is. But what I want to kind of allude to is the fact that, take for instance, you throw 10K onto Fliff, you grind that 10K up to 50K. Be cognizant of what does your tax form total equal when Fliff sends you that form, because sometimes they will send you a 1099 for your withdrawal amount, not the winnings. So meaning you're going to get a tax form for 50K, but you only brought me 40,000 of profit. That's why I always break my clients down into two questions. So in question number two, what is your profit? Have your own spreadsheet trying to tie to what you think your profit was on the year. It's always going to be convoluted. It's difficult to track. I fully understand that, especially with some of the clients' volume that I'm seeing on a daily basis. But first off, it'll protect you in an audit. If you're ever audited, we just provide the spreadsheets and we provide what other documentation we can provide. I have seen the IRS a little bit all over the place with their audits on gambling. I've seen them sit here and tell some of my clients, hey, no, that third-party documentation from Bellagio doesn't count, because how did I know your card was in the machine the entire time?
Right.
But now I'm going through an audit right now with a client who just signed on, and I sent the IRS agent their Excel spreadsheet of their daily log session. IRS agent said, no, I want to see more information. Send me some of the profit and loss statements from the casino. I had the client go gather all of the win-loss statements, and it actually shows that the client ended up paying tax on 70K more than what the P&Ls say. So what's the IRS going to do now? So I realistically would like to see more of a set standards. Can I use third-party documentation? Can I use my spreadsheet? Because I see it kind of all over the place here.
I was under the assumption another tax pro, Russell Fox,
Yep.
said it was kind of established in tax court that the IRS shouldn't or doesn't care about third party.
They shouldn't.
Or what the casino win-loss with the casino. It's your logs. Your logs usurp everything.
Absolutely. So then how am I sitting here with an audit on my desk today, gathering this client's P&L documents to prove it? Why won't they say the exact same comment that the other agent said 1 year ago? How did I know her card was in the machine the entire time? It's not crazy for my clients to say, hey, Gary, I hit a big jackpot. I thought if my card was in the machine that it may have not triggered another W-2G. Some people are a little superstitious about things like that. That's okay. But yeah, now that income is not running through their card, their profit and loss statement's not going to look that way. And what I also have a big problem too, and this is why I tell people to always have a questioning mind, you're going to see a lot of your sports bettors or that are on DK or whatever, they could be unlocking promos and, cashback and rewards, XYZ. How did that factor into what their profit and loss said? Was that a gambling profit? Was that just a reward? How are all of these calculated? So I'll tell most of my clients, to be honest with you, and I agree with Russ 100% on this. Yeah, third-party documentation, I don't even trust. I trust your spreadsheet.
I wanted to go back a little bit. For our blackjack players who aren't having W2Gs, not having to deal with that, from what you're saying, fewer sessions is better, but the risk you have is like, are they going to accept the fact that your session is a day versus a hand versus an hour versus this or that?
I couldn't agree more. I would like to see some more revenue procedures, but on a case-by-case basis. So from that bingo player to that blackjack player, okay, what if we went blackjack to craps? Can we count all of that? I just moved one table over. How is the session now being recreated here, and a new one now needs to be starting to pop up? How about slot machines? Is the slot the next machine I go play? Yeah, IR is probably going to tell you yes for right now, but do you see the disaster in trying to calculate all of this?
One thing I had heard, obviously, fewer sessions is better. There's some precedence to a day being a session, but a cash out could create a problem. So let's say that I'm in Vegas on a card counting trip for 4 days, and I play Bellagio, but then I'm starting to get some heat, and I'm going to go, next door to Caesar's Palace. Like, it behooves me to not cash out, go play Caesar's Palace, and then like on the next session, not the next, I shouldn't have said that. on the next shift, I come back to Bellagio same day and play there some more. Like, that would be better than playing Bellagio, cashing out, going to Caesar's Palace, cashing out, going back to Bellagio, playing it again and cashing out, and then going back to Caesar's Palace again and cashing out. Correct?
Yeah, I couldn't agree more with you. Absolutely. So how are we going to sit here and really start to define this? Because just if you put one sentence out there or one court case out there, it doesn't help people in other industries. The arbitrage bettor is the perfect person to compare this to, because under Sessions method, they're never going to have a losing day. Why is it okay for that player to now really not have to take any reduction whatsoever? But now the client, doing the Sessions method through the blackjack or what you're just saying, could now have issues with a 10% reduction. It's all over the place. It's not really, cut and dry right now. So I think as we start to proceed through this, we will see more, revenue procedures, tax court rulings. I'm going to utilize every single one of those. We have to stay up to date on every one of those court cases, realistically, just to make sure that we're up to date on all of this and not missing anything. Luckily, we still have, another year and a half before we're going to be having to complete a 2026 tax return. But I can't wait that long. I have to be here to make sure that all my clients have the information here in November and December, so we know what we're doing in January, if this bill ends up going through.
Another hypothetical, I'm just thinking through this. Let's say that I'm on a blackjack trip and it's 10 o'clock at night. I'm tired, but I'm down. It behooves me to play another session and try to get into the positive for the day, correct?
Yeah, I see your point, because you're saying hey, if I now end that session on a loss, I'm now taking an extra 10% reduction on it. It's a great point.
This is so weird. And everything in me is just hoping and working towards this getting overturned. But it is the weirdest, no one saw this coming.
And just imagine the IRS trying to get their hands on these records, even if you try to go and keep good record keeping. My clientele, and I can tell you guys, very smart people, very good with spreadsheets, very good with numbers. Me too. And if we start to compare that and we look back at let's say 10 years ago, when all of my, big poker players and clients were coming to me with big crypto income starting to sell off when Bitcoin started mooning. Try go figuring out a cost basis when you stored it in a hard wallet, you moved it through 18 different websites, it now came back into this site, you bought Bitcoin at 500 different prices. It's like one of those situations where the IRS really never touched audits, but going back to crypto, because I can take a look at these spreadsheets even with some of the smartest minds, and they'll be like, no, I can't come up with a cost basis from that. Imagine the IRS trying to get their hands on some of these client session method Excel documents and trying to walk through.
Take it a step further. A lot of card counters, you might play through midnight. You could start at 11 p.m. and play till 2 a.m. and you have no idea where you were at midnight. Like you're not going to tell the dealer, hold on, stop dealing. I need to calculate my win or loss.
It's an absolute headache. And to ask people to track records like that is out of control, because it's not something where you can bring like a QuickBooks in if I have a complicated business structure out here. Well, okay, fine. QuickBooks can come in, make things easier for a lot of people. Well, what are we doing here now on the gambling side of things with our own spreadsheets? Things are just going to always go missing. There's so much, we know this, there's so much confusion going on at casinos anyway. And so, yeah, that this is why tax forms goes missing. These are why my clients get CP 2000s, because to keep track of all of these tax forms is kind of a joke. And then these tax forms come in and they're really not indicative of what our profit is. If I leave the office right now with $1,000 and I hit the casino on the way home and play some slots, I'm down to my last $20. I do a $20 spin, hit it for $1,500. I get a tax form for $1,500. I didn't leave the casino with a $1,500 profit. I left the casino with $500. But now I have a profit sitting at one amount, a tax form sitting at another amount. Make it make sense. You don't really see it in any other industry in all of tax where the tax forms don't equal the actual income that you ended up receiving.
So right now, and I completely respect what you're saying, like if this law stands and there's not a fix, we have to see how the IRS treats it, how the audits go, how tax court challenge cases go to learn more and more.
Yeah. So, because the way that I like to think about things is I say, all right, I utilize letters that come back into my office of how I operate in the future. If I see letters come in and we can't do it that way, no, then we'll never do it that way again, because I care more about your protection first than what we have to owe in tax. And so I'm trying to figure out here, well, what's going to start to trigger audits here? Because they're going to have to code some sort of algorithm to start picking some of these returns up. So if we talk about this in a generic sense, and I don't have an answer for you right now, we'll start to see what's going to come. What's going to look fishier to the IRS on a tax return? A client writing off $1 million in W-2Gs? Are they going to want to take a look to make sure that client lost 1.1 million? Or are they going to start to have problems with people that are just putting one net number into their gambling winnings? Okay, I put $80,000 in. Are they now going to pick that tax return up in audit and say, hey, we now want to make sure that your profit was really $88,000. We want to make sure you applied the 10% reduction. That feels just like a lot of checking, because you're not tying to anything. I really only see audits get picked up for missing income, not for checking losses. Big difference here. Okay?
Yeah.
I don't really see losses being audited. Very minor cases, high amounts, I see gambling losses being questioned. But if, for the most part, if I had a client tie $2.3 million into their tax return and we nailed that number, I won't really see an audit on that.
Okay. So understanding that you really can't give concrete, because we don't know what this is going to do, to be fair to you and all of us. But knowing what we know now, which is very little, other than how the law is written, how would you recommend a card counter or an advantage player operate, assuming that 2026, this law is in effect? What would be the top things in terms of tax strategy for a card counter specifically? Because it's different, like you said, for every different kind of gambler. How would you recommend we operate tax-wise?
I would move to a 24-hour sessions method. If we're going to hit a bunch of different casinos, fine. If you want to go ahead and calculate every session through every casino, feel free to do so. But in my opinion, the most acceptable way to kind of be doing this would take a one-day session of our blackjack play. If we had a winning day, let's put that in column B of our Excel spreadsheet. If we had a losing day, let's put that in column C. At the end of the year, let's total up column B. That will be your session's winnings. Then we'll total up column C. Those are your session losses. Let's get those numbers inside the tax return. Let's make sure we didn't trigger any tax forms outside of blackjack. If we're under that, great. That would be my rough recommendation for right now.
Well, and if we're being honest, as long as we're being honest and reporting that stuff and using the sessions method, I want to say this to everybody because this is something I'm reminded of on a regular basis from my very smart wife. The IRS cannot fathom nor understand what we do.
Never.
And how we do it. And they know nothing about it at all.
Never.
That's an advantage for us.
100% agree.
But as long as you're being honest and you're reporting how Gary just recommended to you and using the sessions method, you will have an advantage should the nightmare occur that you actually get a letter or worst case scenario, get audited.
Couldn't agree more. I can give you like an example I have doesn't necessarily tie into that story. I went to an audit, assisted it with an audit about a year and a half ago. Client kind of provided a spreadsheet that was in regards to her slot play. So it said coin in, coin out, and then it said jackpots. And the IRS agent literally tried to take the jackpots and add them back into income, not even looking at the win-loss. When I just indicated to her that those jackpots were already in the coin out number, she was like, "Oh, thank you. I'm so sorry. I have no idea what's really going on here. Thanks for your opinion on that." 100% result passed through in 10 minutes. So you are 100% correct. We do have the leg up here because we do have more information, because a lot of times when these audits are getting into people's hands, they just don't understand the ideas. They don't understand how thorough, smart, record keeping, treat it like a business, everything like that. My gamblers have more legitimate businesses than some of my analysts and consultants and engineers and everything like that. They're smarter people. They're great with numbers. They're great with spreadsheets. So I 100% agree with you in the stance that, yeah, you are going to have a leg up in these audits in just really just detailing how your days, kind of work here. But then we're taking that information and trying to compare it to 1 or 2 court cases, a couple sentences of law, and then seeing who meets in the middle of, is that okay or is that not okay?
Gary, this has been really awesome and helpful. Do you have a few minutes for like rapid fire? Because we've got some questions. That would be awesome. How do you think this is going to impact the gambling industry? Not that like I'm super sympathetic and really worried about them. I'm just curious.
It's definitely going to cause some sort of decline. It's crazy to say that we can sit here and start to see 100% of the income, revenue, expenses, whatever number you want to compare it to, when now all of a sudden money is being taken out of the gambling space. It is going to drive things up, absolutely. I am more on the stance, and if we go back to the tax numbers that we were talking about, okay, yeah, some clients are going to have immateriality changes here, but immateriality is going to add up over the years. Even if we take a look at the other side of things, it now seems to me like a few specific states out there that are even operating, they're the ones taking the bets in, they're now being hit with higher taxes too. So if their revenue and expenses is going to be cut because taxes are now higher, that's less of a good product to be given to consumers. So if the companies are paying higher tax and we're paying higher tax, how can the product not decline? How can there be the same amount of money in a space when we're taking away a couple percent from each individual and even the company year over year? How can it not dry it up? So, I'm hoping that it really doesn't, but we kind of are going to have to see where the numbers fall, because as people start to get this information in, it is going to start to deter away from the gambling. Just think of it like any excise tax on soda, sugar, candy, whatever. It's always going to have an effect on it over a long, distance of time.
Okay, so next question. It sounds like what I'm hearing is that it's worse to be a professional gambler, but even with what we modeled with some pro card counters results, we're looking at this couple percent increase. But is that correct that part-time or semi-professional gamblers, it's still going to be better to be that, or no?
I think there's always pros and cons to both filing options. Obviously, through Schedule C, filing as the professional gambler, if you are going to be making under $160,000, you are going to be subject to that self-employment tax. So I think as you file as the professional gambler, your income's being forced to be kicked up and outside of federal and state tax. So I do think the professional gamblers will be impacted a little bit more here from that SE tax. But again, every situation is so different, depends on what state they live in, depends on if they're married. A lot of different factors are going to kind of play in here. To fully answer your question, I would say the professional will be impacted slightly a little bit more than the amateur gambler here.
I want to know from a tax professional's perspective, what arguments on this great planet of ours actually support this language? Is there an argument for it?
I think the only argument is that, and this is just me doing as much research as I can, is that it is unconstitutional to pay tax on income that you don't have.
What is the argument for it?
Yeah, I wish I had that answer for you.
I'm curious where it came from. I've not heard.
I am curious to where it came from. My only opinion on this is that about a year ago, I read a study that came out from the IRS, and it was in regards to tax that they thought they should be collected on unreported gambling income. So in my opinion, what that kind of alludes to is, let's take, for example, you have one random person, they come to Vegas for a wedding, bachelor party, whatever, kid hits a $1,500 jackpot, gives $1,500 back dead easy. That kid is, for the most part, not going to go home, remember that he hit a W-2G, give it to his tax guy, and if it may sit under immateriality, he may never even see a CP2000 on that. So anyway, this study went out about a year ago where the IRS thought that they could make about a couple $2 billion a year from unreported W-2G earnings. So they're going to do their best to send all those letters out, but the system and the algorithm may only pick up materiality at a specific threshold. Where the argument was silly is that even if the IRS thought that they should have collected $5 billion more from gambling winnings, well, the only question they didn't roughly ask was, did they count in the client's gambling losses? Because for the most part, we know they weren't in a profit anyway. So in my opinion, I think unreported W-2G income on taxpayers' tax returns sparked this debate, but that's just an opinion.
I want to add to this a little bit too, Colin, because you know that I've been following this really closely and I've been reading a ton about it and been active on Twitter with it too. From what I understand, and Gary, step on me here if I'm wrong, nobody really knows where it came from. And the best guess is that this happened as kind of a last minute step because it was under reconciliation. And under reconciliation, there has to be some kind of offset for a deduction in taxes. And I literally read somebody through the Senate parliamentarian process that it very well could have been an intern that just slipped it in just to check a box.
I did read that. Normally, I know about things a couple months before they get into bills. For instance, I have a bill on my desk right now from New Jersey about proxy gambling. Okay. I knew that popped up in March. I'm still following that through right now. But this seems to me like an 1159 addition into the bill. And I really have no idea where it kind of came from and how they're trying to get those tax back. To me, $135 million a year seems very, very immaterial to this country right now with what we've been seeing going on over the last 6 months of where funds and money was being spent. Why are we now affecting our own taxpayers who are paying you taxable income and punishing them for what? Are we just viewing this as a bad behavior activity? Like we want to put an excise tax on, like I just mentioned, candy, soda, whatever you want to say. Is that what it's supposed to meant to be? I'm not really following it through right here. I just don't ever see my clients pay tax on not bringing any income in.
And nobody's taking credit for it. And there is hope for everybody out there listening. I have not heard a single House member or Senate member come out and say they support this.
I haven't seen one. And I think the bipartisan thing of all of this is even showing you how silly it is anyway, because you're now going to have states get in. And I think the hard part about all of this is trying not to take a political stance. I'm not saying anything bad about any party here. I'm really just speaking in terms of tax, of what's going to happen inside these tax returns. But while we have the platform here, I want everyone to know all about these ideas, because if we sit here and everyone's going to cry about a 10% reduction, why is no one crying about 100% reduction in 10 to 12 states out there right now? Ohio,
Right.
Illinois,
Yep.
Oklahoma, North Carolina, Massachusetts, Rhode Island, all of these states have 100% reduction, and gambling's legal in the state.
Yep. I live in Ohio. I know.
You know all too well what's going on. I think Ohio has some great tax laws that probably do assist you. I know exactly the law that assists you.
Yep.
And that's where it's going to just get frustrating for me to see. Client has no idea that all of these things were impacted. High W-2G amounts. Now my clients can't get their child tax care credits, they're phased out of this, all because their adjusted gross income was so high. So it's like almost in my opinion, I just think that gambling losses shouldn't be what's called an itemized deduction. It should be more of a netting schedule, just like Schedule C is. And this would have fixed a lot of different issues inside of their tax return. So I already thought gamblers were giving up too much to begin with, even before this 10% reduction came in.
To wrap things up here, when can we expect to know whether or not it's going to go through in 2026?
I actually don't have a good answer on that. I think we should probably be hearing things in about a month or so, a couple of weeks. That's my initial opinion. Have you guys heard anything on timing on the bill? I know there's just so many other things that they're appealing right now that we just don't know when this issue gets kicked down the line. Because if they do it in order of importance, I'm assuming this is going to hit towards the bottom of the bill because $135 million to this country with what the other cuts were in that bill would cause this to be immaterial and push it right to the bottom, but it shouldn't be.
There's also going to be another reconciliation package that happens before the end of the year.
Yes.
So I think our best shot is it gets fixed in that.
It's been great to actually see everyone kind of getting involved and actually going and speaking to their Congress people. And it's been wonderful to see people actually writing, actually saying things, because when I see clients' tax returns and I have to review them with them and I'm saying, hey, I wish I can go about things different, but you're a lawyer. You came to me with a $300,000 W-2G. I just had to qualify you as an amateur gambler in Ohio. It cost you about $3,000 or $4,000 in tax. That person's then shooting me an email back on, I'm writing an email right now to my congressperson. I love seeing that. We just want a voice here to make things fair. I don't see other issues arise like that in pretty much all of tax.
Yeah, that's a good point. Someone on the forum, before this got passed, SD1 had posted about like, hey, reach out to your representatives and tell them, to vote against this. Of course, it did pass. And someone on our forum was saying, well, is it too late? And I said, no, absolutely not. Like, reach out to your representatives now and explain that they're trying to hurt professional gamblers, but in the process, it's going to have all these negative consequences. People are going to go offshore. People are going to underreport, and people are getting taxed on unearned income.
Keep contacting your congressmen and your senators.
Yeah. There's our call to action. It's not hard to figure out how. I know Unabated has made kind of a easy, quick guide, and we've got in the forum, we've got kind of a quick guide how to do it. But I just want to let our BJA members know I've been not real vocal about this in the membership area. It's not because I don't care. It's because I've kind of like Gary, I've been trying to be patient and let the information come out before we all panic and, hit the eject button. And like I said, we put a lot of hours into this spreadsheet to try to say, well, what does this mean for a real card counter? I'm encouraged that the sky is not falling, though nobody wants a 1 to 5% tax increase like that on unearned income. But we will continue to provide you guys with what we're learning. We're hoping this stupid legislation is overturned. But if not, we're hoping that we can provide this as a tool and even provide it as a tool for different forms of AP. So we're not just helping card counters out, but helping other people see how is this actually going to impact them, because volume is a huge part of it, volume and how much of an edge. And I know for card counters, okay, 1 to 5%, but it could be pretty catastrophic for some sports bettors or whatnot. So anyway, let you guys know that's what we're working on. Gary, anything you want to add here at the end?
Yeah, no, I think you wrapped it up perfectly. Really, just like in summary, what I would just like urge people to do is like always just have a questioning mind when they kind of review their tax returns. I never have a problem if a client says to me or they question something. When you're giving your tax documents to your tax guy, we have 100 things going on. There's 50 returns on my desk. There's calls coming in. There's 8 people in my office at once asking questions. Have a good understanding of where your tax forms are coming from. Make sure you're understanding and get the proper profit right on your tax return. I see spreadsheets in 500 different ways. I am always going to recheck that with my clients. So really just like in summary, have a questioning mind even when a tax preparer is doing your tax return. Ask them if the profit's right. Make sure you confirm the profit's right. But yeah, like you said, even my firm, we're going to just continue to kind of keep posted on all of this. I kind of took the stance when it came out on day one. I wasn't really going to make a statement on day one until we had more information. just to sit here and digest it so that we didn't say anything that was incorrect. So I think that's a big importance here of waiting till we have good information, then acting on that information. So we're going to stay up to date on it through our legal counsel, provide updates to our clients when we have the proper information. And yeah, I'm still hopeful, but I think there's all ways that we can kind of go about this. We're kind of recreating the rules as we go here, which is also a good thing. There's going to need to be a lot more information provided, but for the time, we're just going to remain hopeful and see what we can come up with for right now.
What's your contact information if they want somebody that's professional in this manner?
Our website is just ConlerCPA.com. There's a client inquiry in there. All inquiries kind of go to me. My father's the owner of the firm. He's great too. We have about a 10-15 person staff right now, through tax and audit. But, really just kind of keeping people up to date on it. So anyone that really reaches out, I always make sure I give them like a half-hour consultation. Really have to sit down, see where your income's coming from, where do you live, you married, what's going on with your wife, XYZ. Half-hour consultation, make sure we get a good understanding of what's going on, plan for 2025, talk estimates as we get into the year. That's always a big thing. I can't talk estimates right now with my clients halfway through the month. I don't know what you're going to make as we hit in here in December. Start planning at the end of the year. But hey, planning is going to need to be a big thing in December if this bill actually goes through, so that my clients have the proper information to head into 26 and make as much money as we can. Just got to be smart about it for right now.
And I wanted to reiterate two points you made. One, be aware of all W-2G income. And then secondly, you said 1099s. I know the two people on our blackjack team that got audited, which is what triggered the team getting audited, was they forgot about some small 1099. Wrote an article and got paid for it. One of the guys, another guy did a little side job, got paid for it, forgot about it. And that's what triggered the audit, which then triggered the whole team. So have those things and you'll save yourselves a lot of headache.
Go on to irs.gov right now. You'll see there's an ID me thing. It's going to take you 2-3 minutes to make an account. Once you get in the account, you'll see your wage and income transcript. This is every single thing the IRS knows about you. Compare it to your tax return. Make sure it got in there. If anything material went missing, go back to your CPA. Have them update their return. Everything will be good if we get that amendment set in here soon. You're not going to see a letter on your 2024 tax return if you missed any items, probably for about 6 to 8 months right now would be my guess. So get out ahead of it now.
Awesome. Thank you so much for your time. And we will keep everybody informed at blackjackapprenticeship.com as we learn more.